want to talk about some of these stocks which are in news specifically. Let's begin, Santosh, with Zee Entertainment. Shares of Zee Entertainment will be in spotlight today as SEBI rejected the settlement application filed by the company and Puneet Goenka. SEBI also dropped earlier show cause notices against Zee, Subhash Chandra, Puneet Goenka, merging them into a broader ongoing investigation into the alleged irregularities and violations. How will this move impact the stock of Zee, which has largely been down this year and last year?
Yes, overall structure is bearish, but there are some signs that worst is behind us. We can expect a upside in this counter from current level. And today we are seeing a good gain in this counter around 6%. It is higher. So yes, a bottom has been placed around the 125 kind of level. So keep a stop loss of 120 for a positional view. On immediate basis, we can expect a rally towards 150 kind of level. And if it manages to sustain above 150, the overall targets comes around 180 level. So the stock is risky, so only aggressive investors, their risk taking capacity is higher, can take position in this counter. Otherwise, there are multiple options in the market. Better to avoid this counter. And if you are aggressive, then you can buy this counter at current level with a stop loss of 120.
All right. That's the word coming in, to avoid that counter. Very surprisingly there, although the stock bottomed out last year, it is, coming back positive up. Has it bottomed out really? Because it's coming back up despite that negative news from SEBI.
Yes, market wants that Goenka family comes completely come out of this group, and market want a clean trade. So there are some signs that the market is predicting that this Goenka family will be out of the board, and there will be some kind of turnaround in this counter, because there's good value in this counter at current level. So risk reward is favorable, but there are multiple issues in this counter, so only aggressive traders can bet on it. Yes, some signs that it has bottomed out, but it has to sustain above 125 kind of level. Then we can expect a move towards 150 level on immediate basis.
All right, and the stock is down about 13% in the last 6 months. Shifting focus now to Avenue Supermarts, the operator of D-Mart retail chain, which reported a 17.5% rise in standalone revenue from operations for third quarter financial year 25, reaching 565 crore rupees. Now, this marks solid growth for the quarter ending 31st of December as far as D-Mart is concerned, reflecting strong consumer demand and operational performance. Santosh, the counter has fallen over 24% in the past 6 months, but we've seen some recovery in the last week. What's your take on Avenue Supermarkets?
Yes, the stock is placed with a 10% upper circuit after strong quarterly updates, because in last quarter we have seen massive pain in this counter because revenue growth was sluggish. But yes, there are some signs the worst is behind us. Then we can expect a recovery in this counter. On immediate basis, the gain may extend further, and it will likely to fill the gap it has created in last quarterly results around 46,050 level. So there is more upside of 500 in this counter around 4600 level. We may see some profit booking, but yes, it has bottomed out and worst is behind us. But after 10% gain, you can chase this counter on positional basis for the target of 4650 and keep a stop loss of below 4000 level, because there are some signs that we may see extension of this gain in coming days.
All right. In fact, the stock is up about 14% on the back of those quarterly numbers. So the market's, of course, reacting well to the Q3 profit as far as Avenue Supermarts is concerned. But shifting focus now to Hero MotoCorp, which reported a 14% decline in total sales for the month of December, recording 3.24 lakh units. Domestic sales also fell sharply by 22% year on year, raising concerns about the demand challenges. This performance could put pressure on the company's stock in the near term. I want to understand from you, Santosh, will Hero MotoCorp shares extend their 30% fall from the peak after underwhelming December sales?
Yes, if you look at the auto sales numbers, then two-wheeler, especially like Hero and Bajaj Auto, even TVS Motor disappointed. Eicher Motor did very well. We saw a strong growth in Royal Enfield number. But yes, this is the problem point, rural area. So, but I think market knows this thing because the stock is currently trading around the support of 4,000. So until and unless it doesn't break 4,000 level, we can expect a recovery. Yes, the outperforming stocks will remain like Eicher Motor and passenger vehicle stocks like M&M Maruti. They may see some kind of recovery, but you should stick with the outperforming stocks name. And if you are holding Hero MotoCorp, keep a stop loss of 4,000. We can expect a recovery towards 4,600, 4,800 level, and market will look for the budget. If you will see any kind of announcement, especially on income tax front or even for the rural area, then we can expect a move, pre-budget move in this counter.
All right, there could be some sort of pre-budget move in this counter. The stock, remember, has been down about 25% in the past 6 months, mainly on the back of the fact that there has been a sluggish demand, at least in the rural economy. But shifting focus now to Bharti Airtel, which has announced its agreement to acquire a 26% equity stake in AMP Energy Green 3 for 37.89 crore rupees. Now, AMP Energy is a special purpose vehicle established to own and operate a captive power plant, highlighting Airtel's commitment to sustainable energy solution. Now, Santosh, over last 1 year, Bharti Airtel has delivered a return in excess of 50%. Do you expect the strong run to continue?
Yes, the overall structure is extremely bullish, but for timing, it has entered into some kind of consolidation phase. So we can expect some period of more consolidation around this level of 1600 level. We can expect a consolidation range of 1600 to 1700. Once it will cross 1700 level, then the momentum will resume towards kind of 2000 level. But for timing, it may see some kind of consolidation in the range of 1600 to 1700. If you are an investor, hold this stock. If you are a trader, better to avoid this stock until it trades in the range.
All right. That's the view coming in. Looking at the stock, has delivered about 12% returns in the past 6 months. Year to date, marginally higher, but today is down about 0.8%. Let's move on to Varun Beverages now. Varun Beverages has announced an investment of 412 crore rupees in its South African subsidiary, a beverage company proprietary Bevco. Now, Bevco manufactures and distributes PepsiCo licensed products and its own non-alcoholic beverage brands in South Africa, signaling Varun Beverages' commitment to expanding its footprint in the region. Now, Varun Beverages has been one of the best performing large cap stocks over the past few years, Santosh. However, in the last 6 months, it has not done much for the investors. Do you think it's now ready for an up move?
Yes, Sweta, you rightly pointed out that it is one of the biggest multi-bagger stock in history. And currently, for even entire 2024, it remained in a range. On the upside, it failed to cross around the 680, 660 level. On the downside, even 560, 550 level acted as support level. So there is a range of 550 to 650. So it has to sustain about this 650, 700 zone. Then we can expect resume this momentum. But for timing, I think it may spend more time in this range. So better to avoid to chase this counter in the range of 660 to 680 if you are a trader. If you are an investor, so stick with this counter. Once it will cross this 680, 700 zone, it will resume its uptrend towards 800, even 1000 levels can be seen in coming days or months. But for timing, if you are a trader, better to avoid.
All right, and let's shift focus now to Indian Railway Finance Corporation. The IRFC has signed now an MOU with REMC to finance renewable energy projects supplying power to Indian Railways. The partnership will also explore financing options for thermal, nuclear and renewable energy projects under captive model, aligning with India's push for sustainable infrastructure. What are the key levels at which one should track, Santosh, IRFC?
Yes, structure is looking interesting because the counter is making higher lows. If you look at the lows, in the month of October, it made a low around 133 level. Then in the month of November, it made a low around 136, and in December, the low was around 147. So structure is looking bullish, but it has to gain momentum. On the upside, we can expect a move towards 166, 167 level. Once it will cross this 167 level, then we can expect a move towards 200 level. So risk reward is favorable. You can keep a stop loss of December month low around 146 and buy this counter, even hold this counter for an immediate target of 167. And once it will cross 167 level, then we can expect a move towards 200 level.
All right. That is as far as Indian Railway Finance Corporation is concerned. It's up about 2% this morning. Santosh Meena, thank you very much for taking time out. Thank you for joining us here on News 9.